Hello again, everyone. My name is Jeff, otherwise known as the Economic Prepper. In case you don't know, this is the first time stopping by. First off, thank you. Secondly, I keep these videos nice and short, so I value your time. Just cut right to it, so you guys can move on and learn something, and then move on. There we go. All right. So what am I talking about today? I've talked about tariffs a lot lately. I'm not going to talk about tariffs very much, if at all, in this one. So those of you who've been following the last couple of videos, you're probably welcome because you're tired of that topic. But what I wanted to talk about is banking and Bitcoin and what's going on behind the scenes with that. Now, you probably haven't seen much of the news lately. Last couple of weeks, banks have been getting more and more legislation and approval to offer Bitcoin services. Now, they may offer other cryptocurrency services as well, but what does the service mean? First off, you're going to be seeing advertisements from, name a bank, Chase, Bank of America, you name it, where they say, hey, get Bitcoin here. Much like when you see at the grocery store and you see those big coin machines, they say Bitcoin available. Banks are now going to make it available, and they're going to be marketing to it. Like, hey, this is going to be the marketing ploy that I see. They're going to say, hey, your money's safe with us. Why not leave your Bitcoin here too? You invest with us, you save with us, invest in the future of currency with us too, Bitcoin. And we'll store it for you. You don't have to learn the tech. You don't have to learn what a Ballet Wallet is. You don't have to learn how to use them. You don't have to learn how like a Trezor or Ledger. I don't recommend either of those because they're hacking targets. It's an older video, but that's just a video for a different day. But what's going to happen is banks are now allowed to offer Bitcoin services. So they're going to start advertising these. Now, we all know that about 90% of the U.S. probably doesn't have any crypto, doesn't know much about it. But if you have someone that trusts banks, and I'm thinking probably someone of an older persuasion typically, mostly our seniors, they grew up with banks. They have Christmas club kind of thing stuff. Like, who still does that? But they leave their money in the banks. But most people don't know the rules of banks. When you put these, these meaningless pieces of green paper in them, right? If you open up your account, you look online, it's all digital, right? It's like, just say you have $500 in your bank account, right? You have 500 of these, but you don't really have 500 of these. You have virtual of these. You don't have the actual pieces of green paper. You have the digital form. Now they're going to do the same thing with Bitcoin. But before I explain that danger, first off, the original danger with banking is that once you deposit funds with the banks, you are the last creditor if they go belly up. So in other words, if the bank implodes, if it closes, if it goes bankrupt, you are one of the debtors of the bank and you get paid last, which means before they go bankrupt, they will bail in all their accounts. So all those numbers, that $500 you thought you had, gone. It's now going to a higher level creditor, someone who owns the stock in the bank or private funding, whatever. But you're not probably getting your money. Now, what about FDIC, you say? I understand FDIC, insurance, everybody knows that phrase because they pushed it on you. It was part of their marketing. The truth about FDIC is that it's less than 2% funded. So if too many banks go belly up, FDIC can't cover it. Now, they may print more dollars because that's what they do to insure it, but that there is that risk. And do you really want to wake up one morning and have that $500 go to zero and not have any other recourse? That's why you get things like Bitcoin and things like this too, precious metals. All right, so you get these things, the nice thing about this is it's in your hand. Same thing if you have a Ballet Wallet. Okay, there's a Ballet Wallet right there. You got these things. I could put my hand on those pieces of wealth. I can't put my hand on that digital $500. That's the difference, and the banks can bail it in. Now, so again, the FDIC is marketing that they use, even though it's agreement with the government to insure your funds. It's part of their marketing because they know in the unlikely event that the bank goes under, they will bail in those funds, and that's the way that those are treated. And it's buried in those agreements when you open up your account. It is all there if you want to dig for it. It's true. I made videos on it in the past, but now Bitcoin. Okay, they're gonna same script. They're gonna advertise, hey, you trust us, you like banking with us, why not get your Bitcoin with us too? You don't need to learn about these Ballet Wallets. You don't need to learn a Trezor or a Ledger, which I don't recommend because they're kind of a hack target. But that's a video from another day. I've done that in the past. I could go over it again if you'd like. Let me know in the comments. But banks are going to market to people, typically those who trust banks still, and say, hey, if you want to invest and diversify, try this new version of currency that's out there called cryptocurrency and get some Bitcoin. We'll take all the hassle away from you. We'll give you another tab on your Zelle or the app for your phone. Say, here's your cryptocurrency account. Now, same warning, they can bail it in. I'm guaranteeing that if the bank goes under, they will take your Bitcoin. So you need to talk to people like me and say, how do I keep it safely and keep it stored? It's not as hard as you think. You can get something, an easy product like a Ballet Wallet, and just, again, a smartphone, and you're set. In a few minutes, you have it. Something as simple as getting it from Cash App and moving it to a Ballet Wallet, or back and forth for some practice with a smartphone. Those are things you're going to need to learn to be able to save and spend in currencies outside of the dollar. But be careful when banks make things easy, like Venmo, Zelle, direct deposit. They do it for a reason. They do it and the FDIC insurance, that's for marketing. They're going to do the same ploys with Bitcoin, and they're coming for your money. And don't say I didn't warn you. I don't want to instill fear in you, but be careful where you leave your wealth. Because if you can't pick it up and take it with you, like this, or with a Bitcoin wallet, then there could be an issue one day. So buyer beware. And in case you're out there and you're like, if you made it to this far into the video, I appreciate it. But one last comment to the people that are experienced with Bitcoin: say, I don't need all this stuff. I know better than, not your keys, not your coins. I got my seed phase. I got all that stuff. I know what's going on. You're going to be on the hook too, because when this starts to happen and banks start to advertise about Bitcoin, people are going to call people that they know who have experience with Bitcoin. So your phone's going to ring. So have this available. Share this video with them. I'm fine with that. Tell them, like, hey, I know this guy, Jeff. He's an economic prepper. He's been in Bitcoin for 8 years plus. He knows how to keep it safe. Talk to him. It's all good. I'll take care of him. But be forewarned, even if you're in Bitcoin right now, you are now the expert as new people come into the scene. We all want adoption of the new currency, but that's the small price you have to pay. So, lots said today. I'm going to leave it there for now. I will read every comment. Like, share, subscribe. Share this video with somebody who needs to see it. And I'll see you in the next video. Take care.